Hello, good morning and happy Friday. Welcome to today's Daily Dose of Market Insights by OANDA, presented by myself, Kelvin Wong, the Senior Market Analyst of OANDA Asia Pacific. So very fast we approach the end of this week, but as we know that today's markets are still moving, there is actually very important market, we call it happenings that I'll just share with you for today. On Friday, today will be the 8th of December. So before we start our daily dose of market insights, let's take a look at the disclaimer slides first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits, and as well as any forecast or prediction in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. So let us take a look at what happened last night. Okay, so what happened last night? One thing, that means during the European session all the way to the US session yesterday. So firstly, primarily two things that happened occurred yesterday. The first one that's much more important one is related to a potential regime change in the FX market. So we know that yesterday the yen, the yen strengthened by a fair bit without any much clear catalyst, except that the fact that yesterday there's actually a BOJ, some kind of BOJ federal BOJ officials speak. So what this BOJ officials speak is key BOJ Bank of Japan officials speaking in the parliament or speaking to the press. All right. So what happened over here yesterday was the fact that there's actually a deputy BOJ governor, remarks indicating that the December meeting, BOJ December meeting on the 18th and 19th of December is now a live meeting. Why is it live? Because he did mention that potentially, okay, over here, BOJ governor, Deputy Governor Himino playing down the adverse effect of a rate hike. So that is potentially a kind of a signal indicating to the market that BOJ is about to shift from its decade-long of short-term negative interest rate policy to a normalization one. That means either they could actually scrap it, the negative interest rate, or they could actually start to sound much more concrete guidance that they're about to actually revert back to a positive short-term interest rate environment in Japan, away from a decade plus of short-term negative interest rate. All right, that is since the last 10 years. So it was actually a earthquake shocking move in the FX market. So what we could see over here is that the dollar yen actually plummet. That means the yen strengthened by a fair bit based on this 5-day rolling performance in the FX market. So the dollar is actually the weakest in the last 5 days, rolling 5 day against the Japanese yen due to this hawkish remark from BOJ Deputy Governor Himino. All right. So now, in terms of technical analysis, why it also kind of create a negative feedback loop into the dollar yen, because as we know that this remark actually triggered a bearish breakdown over here. This was yesterday, a bearish breakdown right below this medium term ascending channel that is in place since 24th of March 2023. So by triggering out this breakdown over here, it actually creates much more negative animal spirit into the dollar yen, and as well as exhibit or reinforce this ongoing short-term downtrend that is in place since 14th of November, now starts to morph into a medium-term downtrend at this point in time with the break of 144.80 yesterday as well. So, and if you look at yesterday's movement in terms of the percentage change, yesterday the dollar yen plummeted by negative 2.14%. So yesterday's loss on the dollar against the yen is the most, I would say, is the steepest since January 2023. So that's close to about a year of movement. So yesterday movement is considered a pretty much significant movement on the FX market in terms of the Japanese yen as per se. But what things boils down in mind over here is that the movement or of this dollar yen triggered by a much more hawkish speech developed by key BOJ officials came ahead of the Federal Reserve meeting on the 13th of December. Like I mentioned earlier, why 13th of December meeting is very important. Why? Because the Federal Reserve official will also release their dot plot. Okay, what is the dot plot? Dot plot is actually indicating Federal Reserve officials forecast of Fed funds rate, inflation rate in US, and GDP growth forecast in US ahead of the in 2024 all the way up to 2025. That means it's a forecast. So in the previous dot plot meeting over here, the Federal Reserve officials still indicate there's a chance of an interest rate hike going to US. Okay, during the previous dot plot in September, the previous FOMC meeting. Okay, and also they did indicate over here is that yes, in 2024 there could be an interest rate cut coming into play in 2024, but not as aggressive as being priced in by the market right now. Because if you look at the market, it's actually pricing in close to 4 to 5 interest rate cut of 25 basis point each. And based on that, if you look at the Fed funds rate right now, the Fed fund expectation means the Fed fund future expectation as being calculated by the CME Fed Fund Watch 2 over here. There's right now a 0% chance of any interest rate hike in the 13th of December meeting. Okay, so this win expectation already in the last 1 month or so, or 4 weeks or so. But if you look at the current accumulated probability, okay, across 2024 next year. So right now, there's actually almost 0% chance of any hike heading into 2024. So this is a very dovish tilt, calling for a or advocating for a very dovish Fed pivot heading into 2024. So that's actually much more optimistic in terms of interest rate cut that is being penciled in previously in the previous September dot plot. All right. So market participants right now be paying very close attention to 13th of December. What's in the mindset of Federal Reserve officials in terms of their guidance of the Fed fund rate into 2024? Is it within market expectation right now, or market expectation is way too dovish? But what's interesting over here is that it seems to us that the BOJ officials has the guts to actually sounded so hawkish ahead of 13th of December. So perhaps do they know something that we do not know? Well, that boils down more than meets the eye. So the only answer we got is that it's only on the 13th of December. So later I will share with you all the short-term technical outlook to look out for dollar yen. All right. Now, another event to watch out to share with you all yesterday was the release of the US initial jobless claim number. So US initial jobless claim number, or continuous jobless claim as an aggregate. So it came in much more better than expected. So markets are expecting an increase of 1910K of more jobless claim, but however only 1861K of jobless claim as being added. So indicate to us that the situation in the US job market is not as bad as market is being priced in. So perhaps I would say that CME Fed Fund Watch 2 indicating 0% chance of any hike in 2024 is a bit too dovish. Well, to validate that, today's NFP number will be pretty much key. All right, so today key data will be centered on the NFP. Okay, US non-farm payroll data. So the US non-farm payroll data over here is market is actually expecting an increase of 180K from 150K jobs added in October. So it's a slight 30K increase. So anything that is above 180K will definitely start to see a bit of repricing of this dovish expectation as being portrayed by the CME Fed Watch 2. That means, i.e., perhaps we start to see that market participants are getting way ahead, too optimistic of a calling for a aggressive rate cut, Fed funds rate cut heading into 2024. Okay, so now comes to the short-term technical outlook on share with you. So let's start with the dollar yen story first. Okay, so for the dollar yen story, do recall that since 2 weeks ago or 3 weeks ago, we have been having a short-term bearish bias. So what's interesting over here is that the price action of the dollar yen has already hit the 200-day moving average, acting as a support level at 141.85. Yesterday, we do have a short-term bearish outlook support level to watch out for since the start of this week at 144.80. Price level has been made yesterday. So yesterday, it printed a low of 141.62. Okay, so now let me expand my chart over here. Okay, good. All right. So what you could see over here is that the RSI has already hit the oversold level as well. But right now, there is no bullish divergence yet on the daily RSI. So indicating to us that any potential bounce that could come right at this juncture here could be more or less of a counter trend rally or counter trend rebound. Minor, I mean, we're talking about perhaps 1 to 3 days before the bearish force reinserts itself again, as we know that right now it's actually evolving in a medium-term downtrend on the dollar yen. Okay, given yesterday's severe price movement on the downside for the dollar yen. So if you look at the daily chart, that's the daily chart. So now let's look at the hourly chart to actually decipher our short-term outlook or fine-tune our short-term outlook. So if you look at the chart itself over here, we start to see signs of short-term bearish exhaustion. Why short-term? Because it's an hourly chart. Because the hourly RSI has started to shape a bullish divergence, increasing the odds of a potential counter trend rebound. Okay, so with that, I'll be using the 200-day moving average is at 141.80 level on the day chart. So I'll be using yesterday's swing low, 141.60 as my key short-term pivotal support for today, flipping to a bullish bias. But bear in mind, this bullish bias is only a potential minor counter trend rebound within a medium-term downtrend. Okay, within a medium downtrend, next intermediate resistance to watch out for will be 144.80/145.30. A break above 145.30, potentially 146.25. But bear in mind, this is the first zone just to watch out for as well. And this zone actually correspond close to the 61% Fibo retracement of the last 2 days of swift move, 50% Fibo retracement. Okay, so flipping to a bullish bias for today, given the fact that the hourly RSI has started to flash out a bullish divergence at a extreme oversold level, indicating to us that yesterday's swift down move is a bit extreme, exhausted on the downside. And right now, potentially, we could advocate a potential short-term minor corrective rebound. But I stress again, minor corrective rebound within a medium-term downtrend. Okay, resistance to watch will be at 144.80/145.30. Okay, but however, after that, if you see an hourly close below 141.60, then this minor counter trend rebound scenario will be invalidated to see the continuation of this impulsive bearish move heading towards the next support level at 139.20. All right, so that's for the outlook of the dollar yen. So what's 139.20? So 139.20, if you look at the daily chart, is in fact this area over here. Okay, this congestion zone of 21st of July and 4th of August on the daily chart. It's not sorry, over here. So pardon me, 139.20. Give me a minute. Let me expand it. Okay, it's this area here. 14th of July to 28th of July this year, congestion area on the daily chart. So that's derived my 139.20, and as well as the 50% Fibo retracement of this entire major uptrend from January 2023 low all the way up to 13 November 2023 high. 50% retracement, also confluencing at 139.20 as well. So that's the next support level to watch. Okay, if 141.60 is broken down today on the downside. Okay, so that's the outlook for the dollar yen. Now, Aussie dollar. So Aussie dollar yesterday managed to clear above the 65.90 level. So that is kind of an upside trigger level as well, and back above the 20-day moving average and as well as the 200-day moving average. Okay, so still maintaining that short-term bullish outlook on the Aussie dollar, but I don't want to tie it so tight at 165.65, pardon me, 65.90, 65.70, because today we do have a key important volatile event, which is the US non-farm payroll data. So I'll be still sticking to 65.20, 65 figure level as my key short-term pivotal support level. So as long as this level is not surpassed to the downside, we would actually be still maintaining that short-term bullish outlook towards 66, 65 slash 67 figure level on the Aussie dollar. So that's the next intermediate resistance level to watch over here. But however, a breakdown below 65 figure, that means the hourly close below this level, will invalidate this short-term bearish outlook to kickstart another leg of minor corrective decline, heading towards this upward sloping 50-day moving average at 64.40 level, also confluencing with the medium-term ascending channel support that is in place since 26th of October 2023 low. Okay, now European currency. So doing the European currency, let's start with the euro dollar first. So on the euro dollar, what's interesting over here, yesterday the price action hit our short-term bearish outlook support level at 75, 1.075. And what's interesting over here, upon hitting this level, there's signs of a bullish reversal, short-term bullish reversal coming back into the euro dollar. Okay, why? Because number one, the euro dollar, the hourly RSI managed to pierce above the former resistance around at the 49 level, now turns into a pullback support, and as well as there is actually signs of a bullish divergence as well over here, higher low right at the oversold level. So all in all, what we could see over here is that this minor corrective pullback from 29th of November all the way to yesterday low seems to be exhausted on the downside and potentially ripe for at least a short-term recovery in the euro dollar. But I will not use 71.075 as my key short-term pivotal support. Why? Because of today's, again, the key volatile event, which is non-farm payroll. Sticking to 107 short-term pivotal support level to be more conservative. Why? Because it's confluence with also key elements, the former swing high area of 24th of October and this upward sloping 50-day moving average, all confluencing at 1.07. So 1.07 short-term pivotal support level. This support, as long as this support level holds, potentially short-term recovery scenario on the euro dollar, 1.085 first resistance, followed by 1.09 the next resistance to watch out for today. Okay, however, an hourly close below 1.07 figure level, then we'll see the extension of this minor corrective decline heading down towards the next support level at 1.0630 slash 1.0620. What's this level? Congestion area between 3rd of November and 31st of October, and as well as this medium-term ascending trend line support that is in place since 3rd of October 2023 low. Okay, also conversing at 1.063. So net flipping to a short-term recovery scenario potentially for the euro dollar as long as 1.07 short-term pivotal support holds. Sterling yen, sterling dollar, pardon me, it's Friday. Sterling dollar holding much more firmly than the euro dollar. Why? Because price action going to trade above the 20, the 200, and the 50-day moving average. All in all, price managed to store at the first support level that we highlighted yesterday, 25.60. So still using a 125 figure level as my key short-term pivotal support level. So as long as this level holds, potentially we are looking for a kind of a short-term recovery heading towards potentially the first intermediate resistance to watch will be at 126.65 for today. A break above this level potentially take us up to the minor range stop at 127.30 that is in place since 29th of November swing high. So all in all, still maintaining that short-term bullish outlook on the sterling dollar as long as 125 figure short-term pivotal support holds for now. However, a breakdown below 125 figure level, then we will potentially see the extension of this minor corrective decline towards the next support level at 124.30. So 124.30 confluence with the former minor swing high of 6th of November, and as well as the short-term ascending channel support that is in place since 1st of November. So net still maintaining that short-term bullish outlook on the sterling dollar. Okay, so that's not much, pretty much sum up for the FX market outlook over here. Moving on will be the stock index. So for stock index over here, let us start with the Hong Kong 33 first. So Hong Kong 33 continue to remains very weak. Nice bearish reaction of our intermediate resistance that we highlighted yesterday, 16,500. So still recall yesterday we have a bearish outlook below 16,680. So no change. So I don't have tight so tightly at 16,500. So still maintaining a short-term bearish outlook on the Hong Kong 33 index, which is the Hang Seng index. 16,680 short-term pivotal resistance is not surpassed, looking to at least a test down towards 16,100. A break below 16,100 potentially brings us down much lower towards 15,800, which is the lower limit of this minor descending channel resistance that is in minor descending channel that is in place since 23rd of November high, and as well as a Fibo extension cluster at 15,800 as well. A breakup above 16,680 will invalidate this short-term bearish outlook to see a potential minor counter-trend rebound towards 17,100 resistance level, which also shortly will be confluencing with this downward sloping 20-day moving average as well. Okay, so still maintaining that short-term bearish outlook on the Hong Kong 33 index, holding below 16,680. Now, next up will be the German 30. So German 30 going to actually shape positive elements. Yesterday, the hourly RSI managed to work out from its overbought, its earlier overbought condition, came down but managed to bounce off a parallel support right at the 50 level mark. Okay, 50 minute and going to inch upwards. Okay, shaping higher low. Okay, higher low. So all in all, right, what we could see over here is that the short-term bullish momentum seems to be still intact on the German 30 index. So I do not want to tie it so tightly at yesterday's swing low over here. So I'll use yesterday's swing low area here as a first near-term support level, which is at 16,600, but still using 16,530 as my key short-term pivotal support level to maintain this short-term bullish outlook. With the next intermediate resistance to watch will be at the Fibo extension cluster of 16,780 slash 16,850, which will correspond with the upper limit of this minor ascending channel, or I would say the medium-term ascending channel that is in place since 27th of October low. Okay, confluencing at this next support zone, resistance zone of 16,780 and 16,850 as well. But however, if we start to see a bearish breakdown below 16,530, then this short-term bearish outlook will be invalidated to kickstart a minor corrective decline in first step towards the next support level at 16,310, which confluence with the lower limit of this medium-term ascending channel. So that's the outlook for the German 30, still maintaining that short-term bullish outlook. Okay, US indices, US Wall Street going to trade sideways below that short-term pivotal resistance that we have yesterday. So yes, yesterday we flipped to a bearish bias. So yeah, still maintaining that bearish bias on the US Wall Street 30 as long as 36,240 short-term pivotal resistance is not surpassed on the upside. But price action got to break down below 35,930 in order to trigger this minor corrective pullback towards the 20-day, towards the upward sloping 20-day moving average, acting as a support level as well. We're confluencing with this minor congestion area at 35,490 slash 35,380. Okay, so still maintaining that short-term bearish outlook on the US Wall Street 30 index with 3590 as the downside trigger level. Okay, but a breakup above 36,240, then we will see the continuation of this bullish impulsive up move heading towards the next resistance at 36,555. Okay, Nasdaq 100. So Nasdaq 100 yesterday managed to outperform the benchmark US indices over here. Okay, what up 1.5% due to actually Google itself, because Google yesterday made some announcement of its AI chatbot, but by offering some premium services, so that actually spark up the AI driven rally again. You see Nvidia starts. So if you look at the heat map of the US stock market, so very quickly those related US AI driven stocks is driving the market yesterday. Google up 5%, Nvidia 2.4%, 2.4%, another AI play, which is also related to Microsoft as well, given the fact that Microsoft now has a key stake in terms of management and stakeholding in OpenAI, not Nvidia, OpenAI, pardon me, it's OpenAI. Okay, so it's all about AI driven play yesterday that drives up the Nasdaq outperformance. Okay, but recall that Nasdaq outperformance, it has been trading sideways, in fact holding below the 16,160 short-term pivotal resistance that we highlighted yesterday. Okay, so still keeping that bearish bias. on the Nasdaq 100, but 15,690 will be the downside trigger level. That means this level got to break down in order to kickstart that potential minor pullback scenario towards 15,380, which also confluencing with the upward sloping 50-day moving average closely as well. Okay, so still maintaining that short-term bearish outlook on the Nasdaq 100 as long as this key level hold. Okay, but however, a breakup above 16,160, then potentially we will start to see the continuation of this bullish impulsive up move towards 16,590 next on the US Nasdaq 100, heading towards in the short-term outlook. Okay. Okay, so now that's pretty much sum up for the major stock indices. So let's touch about crude oil. So WTI crude oil over here, what's interesting over here is that price action managed to show some signs of a short-term counter trend rebound scenario. That means, i.e., a bit of bearish exhaustion is being seen at the near-term support level of 69.60 that we highlighted yesterday. Why? Because price action now has started to trade lower. Okay, a lower low over here, but the RSI has started to shape a higher high. Okay, indicating to us that the short-term momentum that was seen in the last 3 days has more or less been exhausted. So potentially it could be ripe for a counter trend rebound on the West Texas oil. Okay, so using I don't use it so tight yesterday's swing low at 68.80, so I will use 67.55, 67 figure level as my key short-term pivotal support level for today. So as long as this short-term pivotal support level is not surpassed to the downside, potentially WTI West Texas oil could shape that minor counter trend rebound scenario in first step towards the intermediate resistance level at 72.40, okay, which is the former swing low area of 17th of November that has been taken down on this Wednesday. But however, if we start to say hourly close breakdown below 67 figure level, then potentially West Texas oil could actually continue its bearish movement to test the major support at 64.20. So why is this major? Because if you look at the daily chart, this pretty key, this zone over here, okay, over here, this level 64.20, the swing low of 21st of March and 3rd of May, then thereafter it kickstart that 20+% rally, okay, heading into the post summer month of this year. Okay, so this is a major resistance, major support level to watch 64.20 if 67 figure level is taken out. Okay, so all in all, flipping to a short-term bullish bias uh, uh, due to a positive bullish divergence that's being seen on the hourly chart, indicate to us that the last 2 to 3 days of bearish down move the momentum has been more or less been exhausted. All right, so now that's WTI crude oil, West Texas oil. So now lastly will be the gold price. So for gold, right, if you look at gold over here, the gold spot, the XAU/USD, so no change, still maintaining that short-term bullish outlook, holding at the 2006 pivotal support level. So as long as this support level holds and a breakup above 2036 level, potentially could see the first resistance, intermediate resistance, to come in at 2067. Okay, so still maintaining that short-term bullish outlook on gold, XAU/USD, but however, a breakdown below 2006 potentially could expose the next support level at 1955, which actually confluence with this upward sloping 200-day and 50-day moving average. Okay, so that's pretty much sum up for today's daily dose of market insight. So do have a great day ahead and a great weekend, and we shall speak again on next Monday. Thank you.